All right, it's time for our top three things to watch next week. So, Kev, let's go through our list. And what I wanted to start off with is just talk a little bit about treasury bonds and gold because, I mean, you have some pretty strong opinions about what bonds we're going to do over the long term. But I want to I want to emphasize that your view is turning to being very long term. Right, like you are long-term bearish bonds, right? But obviously the coronavirus could, and you can push back on me, could be driving a global economic slowdown.
Oh, well, no, it's not could. I'm not going to push back. It is driving a global economic slowdown.
It is.
The only question is it in the price? That's all we have to ask.
But yes, is it in the price? And I don't think it is. Because everyone that I heard, anyone who starts doomsdaying about the coronavirus spreading, even though there was a CNN piece with the CDC talking about how it could be extended. The point is that most people are like, yeah, this will just blow over. You know what? I think that there's a wake-up call still coming, but I don't think it's priced in. But the point is Treasury bonds have more. I'm using the TLT here, which is 20 years, so we're going really long-term here on that, not even the 10 years. But I wanted to really kind of point out, it's like, if it looks like there could be 2% of global GDP shaved off from a slowdown, I don't know if that could be defined as a recession or not, but let's call it a slowdown. I mean, that certainly offers the opportunity for interest rates to revert back to their lowest points and even go lower. I'm asking the question, do we have another leg breaking out here? I mean, are we going to see a TLT going to 155?
Think it's coming?
Yeah, I do.
So I won't disagree with you, which is probably scary.
Yeah,
probably
so everyone should sell it.
Yeah, because and I will tell you something that I am long volatility on
bonds.
Yeah,
okay.
Because I think that the market is probably underestimating the chance that these things are going to move.
Right.
I think that when I look at bonds, I'm a little scared by them. And today, especially, this is Friday, they've been seeming to get a bit out of nowhere. I know it's going into a long weekend and the people are just scared that it's going to be bad news. Maybe we'll get up Tuesday and we'll be back to selling them. But, Patrick, I'm not going to take the other side, so it's probably the top of the range and we're headed lower.
There you go. So the other one there, though, is gold. And the one thing I wanted to point out is that gold had every reason just the other week of as a technician, whenever you see a sequence of heavy selling like these red candles, they often would trigger a lot of technical signals that traders would act upon, which creates that feedback mechanism and creates a trend move. And what's interesting is that the bulls came right in and bought the dip and held the price. And so it feels like that the bulls are actually digging in and defending the price on every dip. And that to me, like bonds, is showing characteristics of accumulation. And I'm going to be watching definitely going into the next week and week after whether or not the bulls can build on this momentum. Like, we have not broken to a higher high, which as a technician you would say I buy if it goes higher, right?
Yeah.
So you can talk your smack all you want, but the point is that I'm very curious as to whether the bulls can actually muster up some momentum to take this higher.
Well, Patrick, I'll again get on your kind of bull wagon here and say
don't goocher this.
I know I am going to goocher it. If you look at the U.S. dollar, it's been like running like it stole something, or like Forrest Gump. And the reality is that gold has hung in there like a champ, considering the strength of the U.S. dollar.
Yeah.
Is this just safe haven in the bid from the coronavirus? And if we get a situation like Professor Schmiegel says that all of a sudden it gets fixed up overnight, it all gets sold? I don't know. But I think that if you think about kind of my scenario, which is that there's a lot of stimulus coming, that stimulus will be inflationary. I agree with you that the world economy is slowing and that they're going to, at the very least, keep real rates lower. And if you think about what's positive for gold, low real rates is what
Yeah.
is the biggest
It's-
driving
it's
factor.
one of them, yeah.
So I actually even like your long
There's
gold
also-
better
there's-
than your long bonds, buddy.
It's also important to have more buyers than sellers.
Yeah. Okay, let's go on that profound piece of wisdom. Let's go to number 2. Next week we get multiple FOMC speakers.
Yeah, a lot of them.
Yeah,
Like,
you know what?
5 of them.
We get Neil Kashkari, which I think that President Trump was an idiot not to assign him to be the head of the Federal Reserve. That's
In
actually
hindsight.
Yeah, well, I said it at the time.
You did.
Yeah,
You did.
and people were like, I kind of joked about it and said that's the Fed's that's the president's man. Like that's the guy, because he is the most dovish, crazy guy. He makes me look like like in terms of easy money and just kind of stimulating. That guy thinks that we should go pedal to the metal at all times. Anyways, there's going to be a lot of different speakers. It'll be interesting to see what they say. I think when we were chatting about this earlier, you said something to the effect like, "What are they going to do? They're not going to say anything different than
But you think
Powell
they
did."
will?
I think you're watching for signs about how worried they are in terms of this coronavirus, and then I'm more worried on the other side. I'm still concerned that they're looking at the stock market and they're looking at the credit spreads and they're going to get nervous about it. And so, although I'm not predicting it, I'm worried that you might get some of the more hawkish members, and Kashkari will be one of them, but some of the more hawkish members trying to talk down the market.
Well, you know what? The problem is that it's very hard for them to provide easing when the market is going to take a dovish tone. Like if they give a dovish tone, then the market's just going to rip even further, right? Like
Right,
they
so
have, they
that's
have,
my
they
point,
have
is
to
that
stop
they-
fueling it.
That's right. So to some extent, they're kind of back to their situation where they always used to fight the kind of market's tendency to keep rates lower.
Yeah.
Right? Like the market would go and start pricing and easing, and then they would try to stop it. I don't know. It'll be difficult to do that in this environment because the reality is that you're correct that there's a lot of uncertainty with this coronavirus. We're still a long way. You know, half of Asia is still holed up in their apartments, and it's not good. So this, I don't know, Patrick. I just think it's something to watch for.
All right. Well, you heard it from Kev. So let's, number one, obviously a number of the PMIs. And you're a big fan of PMIs as leading indicators, right? Like,
Well, they're just faster than a lot of the other data. Like by the time you get like a GDP number, you're looking like that's months ago. It's almost useless. But PMIs are one of the more quick indicators, so you can get a sense for the economy and how it's doing. And that's what we need to be watching. We need to be watching for the kind of a decision about how much this is affecting the world's economy. We know that Asia has stopped, but has it stopped Europe? Has it stopped the U.S.? I don't know. I honestly don't know. And I think that most people don't. And if someone tells you they do, they're probably lying. Maybe they'll get lucky with their guess. But there's a lot of uncertainty out there. And so what you need to do is you need to watch for these PMIs, because up until now, most of the data, the economic data we get was kind of backward looking, and the markets just kind of looks through it because they say it doesn't matter because now the whole world's changed with the advent of the Wu-Tang flu thing or whatever, right? So anyways, that's what I think we should watch next week, European and U.S. PMIs. Keep your eyes peeled.
all right.